Let's bring on board Sandip Sabharwal as well, joining us this morning. Sandeep, I'm not sure if you've had a chance to look at that White House press release with regard to power and power ancillaries and what possibly could be impediments to imports into the US from select countries, which could essentially enable diversification. India could be a beneficiary of power ancillary exports, transformers and the like, to the US. And given the data center build out, they are worried with regard to cyber and the like. Sandeep, your sense with regard to the trend of India exporting power ancillaries and what this could likely mean, and any stocks which could benefit from this?
So I think many of these things will have a long-term impact. It might not have any impact in the short term because many approvals will need to be there. Then there would be requirements. Some companies might be pre-qualified, others will need to be qualified, etc. So that's one part of it. Second part of it is that uh, the Indian markets itself are seeing uh, uh, execution challenges for many of these companies because they have the orders, but execution is slow. That's why the Indian government also proposed that 3 Chinese companies will be allowed to sell in India for I think 2 years. If that was, I think that was the proposal. So as it is, I think these companies are doing well. Sentimentally, it's positive. Some of the MNC subsidiaries, uh, some of the companies which are MNC subsidiaries, they could potentially benefit more longer term if this actually plays out. So it's sentimentally positive, of course. Actual impact might still take maybe 1 or 2 years to play out.
Sandeep, I wonder, markets have been sluggish. We've been very, very range bound. Some of the heavyweights just not participating at this point in time, Reliance and HDFC Bank, among others, of course. What do you make of it? Do you believe that it's starting to look good value, or do you believe that this sluggish run could continue?
So valuations of many large caps which you mentioned are attractive. In the mid cap universe, also many companies are attractive. The main issue in India is the supply. Every week there are 4, 5 IPOs. Every day there are block deal sales by promoters or old PE investors of into companies which came out with IPOs some time back. So last few days itself, I think every day's average is 5, 6 thousand crores. So it's very tough for the markets to perform in this context when the foreign fund inflows are very muted. So although foreign fund outflows have moderated significantly, some inflows have started, but this kind of supply absorption is very tough, and I think that's the biggest thing plaguing the Indian markets.
And Sandeep, why do you think that is? Because, of course, understandable that you've got IPOs coming through, and that was well planned. But the fresh paper outside of the IPOs, lots of foreign funds either exiting. Then there are some Indian promoters also trying to offload some part of their stake. Do you believe we've reached a sort of top, at least in some of the sectors and pockets?
Yeah, like we talked of K-shaped recovery in the economy post-COVID, like it's a K-shaped market where a few sectors, only a very few set of stocks are doing well. So many of the promoters of these stocks are cashing out because they themselves don't believe the kind of valuations they are getting. On the other hand, a lot of the other part of the market is languishing and has been languishing for a long time. So I think very few stocks are still getting buying interest in the secondary market. Rest of the attention is, or the money flow is from the funds perspective is going into, like we discussed, all these block deals, QIPs, promoter stakes, offer for sales, etc. Because if you see last month, the net mutual fund inflows into equity were around 25,000 crores. And on a daily basis, on a combining IPOs plus QIPs, I think the supply will be double of this at least. So in this context, obviously, in the markets in the short run are demand supply. in the long run, obviously, they are slaves of earnings. So if earnings sustain, market will, and the stocks which are delivering strong earnings will obviously move up.
Very curious to know what you make of Lenskart, Sandeep, in particular. You've got that block deal which is coming your way. Number delivery has been very strong, right? What we've seen, at least over the last 5 to 6 years, since 2020, is the 900 crore top line that Lenskart was clocking, now clocks around 9,500 crore in terms of FY26 top line. So you've seen the growth clip being extremely strong. Also, margins have moved consistently upwards. So you've seen now margins at 21%, and therefore there's good tailwind with regard to earnings. So while top line growth was maybe 12 to 13% last year, FY26, the bottom line growth was 30% because margins moved upwards. I wonder how you make or what you make of a story like Lenskart.
Yeah, Lenskart has been growing well in the near term, but we need to realize that they operate in a market where the overall market for the entire IVS space is around 85,000 crores in India, growing at around 8 to 10%. If you look at the growth rate of Titan Eye Care or the margins they report, they are nowhere near Lenskart's. So I think uh, it's tough to decipher how they are getting so much margin. Like they are delivering 21, 22%, whereas Titan Eye Care delivers 9, 10%. And their Titan Eye Care has been growing just slightly ahead of the market. And Lenskart has been very aggressive. So I think they've been aggressively opening new stores, etc. also. And when that happens, the sales look slightly inflated. So I would think that the current valuation more than factor in what the reported numbers are. It's like it's tough for them to now, from whatever numbers they are reported, they already, as per the reported number, 12, 13% of the total IKEA market in India. So I think there's only so much they can grow in terms of market share.
Very interesting. Let me go across to Meryl. She's here with Tejas Networks. That one is in focus because they've won a large order from TCS, 1,500 crore plus in terms of the order size. Meryl here with all of the details.
Absolutely. So Tejas Networks is going to be in focus today after a positive development coming in. They've received a letter of intent from TCS. This order is for supplying RAN equipment, accessories and installation materials for BSNL's 4G mobile networks across 18,000, upwards of 18,000 sites. Now, the total value of the deal stands at around 1,500 crores, and the detailed purchase order will be issued by TCS in due course. Now, this is significant because Tata Networks' order book stood at around 1,529 crores at the end of the first quarter. So this deal is almost equal to the company's entire Q1 order book, giving it a major boost to revenue visibility for the rest of the financial year as well. The company's closing order book mix was 93% India and 7% international, while the company's book-to-bill ratio stood at 2.35%. So overall, the BSNL 4G rollout provides a strong growth opportunity for Tejas Networks, and an even stronger growth roadmap and revenue visibility of upwards of its current order book in one single order immediately.
Okay, thank you so much for that, Meryl. In fact, we'll have the management of Tejas Networks. We'll have Arnab Roy coming in at 10:30 to give us a perspective on that order. And of course, what lies ahead as a result of this, and whether, of course, more orders could well be in the pipeline. Hero Moto is the other one. It's set to further increase its stake in Ather Energy, with the company approving an investment of around 1,758 crore. Now, this is known, right? Hero's holding is expected to now rise to 30%, from around 30% to around 33%. Avi here with the details. Avi, what can you tell us?
So Ather Energy will definitely be in focus today, as Hero MotoCorp have announced a 1750 crore rupees of additional equity purchase from an existing Ather shareholder. This deal is expected to close by 3rd of September, and this will increase their stake from 29.8% to 32.8%. Some background for Ather Energy is it is performing very well in the e-two-wheeler space, where the top lines have increased from 1,700 odd crore rupees in FY24 to 3,600 crore rupees in FY26. So that is a 2x growth in revenue over the past 2 years. For some context, just a month back on the 15th of July, on the 15th of July, the board of Hero MotoCorp had announced a 1,000 crore rupees investment in Ather Energy via the warrants route, and for which on the day before yesterday, which is on 26th August, they had finalized a 960 crore rupees investment out of the 1,000 crore rupees board approval, and for which the 25% upfront payment was given of 240 crore rupees. So Ather Energy had showed some very strong rally post the investment of 1,000 crore rupees a month back, and it is expected to be in focus today when Hero MotoCorp have announced an additional investment of 1750 crore rupees.
Thanks, Avi, for that. Sandeep, another stock which was active yesterday was Bharti. After the Singtel con call, which came in where Singtel wants to pair its stake and make it equal to Bharti promoters. Do you see this overhang there for the stock in the near term?
I think because of this overhang itself, the stock has fallen, I think, 4-5% in the near term. So potentially till this gets sold, there could be some impact. On the other hand, on the positive side, there is potential of ARPU increase with uh, Kumar Mangalam Birla also mentioning yesterday in the Vodafone AGM that ARPU needs to move up. So I think that is a more fundamental development if ARPUs actually start moving up more rapidly. So I think fundamentals are positive. Technical, this supply issue could be an overhang and provide opportunity for long-term investors to buy.
Okay. But Sandeep, so from a long-term investor standpoint, as you said, it's an opportunity to buy. ARPUs keep getting better in your opinion, because we had a note come in yesterday which suggested contra. They said that a bulk of the ARPU accretion has already happened, and now the translation will get slower. Your sense? I'm just trying to get a view.
I don't think so. I think even with these ARPUs in India are the lowest, I think, in the world. I don't think we have such low ARPUs anywhere else. And the trend has to be for it to move higher. The joker in the pack obviously is Reliance Jio. How fast are they going to remain more focused on market share, or will they also focus on profitability more? So I think that's the unknown in this entire puzzle. Otherwise, the other two major players obviously want a faster upward movement. So we'll see. But I think trend has to be for it to move higher.
Kunal, on charts, how does Bharti Airtel look?
See, it's looking weak on the charts. In fact, yesterday morning we did a sell call on Bharti Airtel because the expectation was that the stock is acting as a drag. Now, there are two fronts for Bharti Airtel. One, price-wise, the chart patterns are weak. Now, on a relative scale also, I was looking at the pair strategy between Bharti Airtel and Reliance and Bharti Airtel and few of the other peers, which have a slightly high correlation. It looks like that at 1950-60, where Bharti Airtel was few days back, the stock was at an extreme, two standard deviation extreme with respect to the other peers. So there was an eventual correction the stock had to go through. It was just that I think the news flow has, speed up the correction for Bharti Airtel. So I believe on the short-term charts, it's looking weak and possibility that the stock may drag another 40-50 points over the near term. So what we are looking now for Bharti Airtel is more like a ceiling which has been created at the 1950-60 levels. If the stock is unable to break past about this level, say in the very immediate term, there could be a chance that you might see those bounces being sold into and the stock to keep on making fresh swing lows on the short-term charts.
Okay, what we'll do is slip into a very short break, continue coverage on the other side. Slew of things to speak about, viewers, so stay with us here on ET Now.
Welcome back. You're watching the market, and we're still in conversation with Sandeep. Sandeep, how do you look at some of the PSU banking stocks? For the last few days, we've seen some correction coming in. Do you think that it's basically a profit booking what we are seeing in PSU banks?
The PSU banks have challenges, which the primary among them is the deposit accretion, because the deposit growth across the board for most of the banks has been lagging the credit growth as they lose market share to the private sector banks. And this is the biggest threat longer term to PSU banks' growth and valuations, where incrementally they are losing market share in deposits, and deposits are the fodder which helps, especially the low cost CASA deposits, which helps the banks run. So that is the issue plaguing the banks. in the near term, I think this entire FCNR flow will provide some short-term sucker sort of to these banks, but longer term, directionally, those challenges will still remain.
Sandeep, I wonder how you look at HDFC Bank in particular. There is obviously some overhang with regard to leadership. There's plenty of overhang with regard to lots of other issues that are playing out. Opportunity to buy, you reckon, at this point in time at 710 and change?
Yeah, I thought HDFC Bank was cheap at 800 also. Now it's 700. So it's even cheaper. So, so that is the problem with HDFC Bank. It's so overowned that it's become tough for it to perform in a time when, like we discussed earlier, all the money and incrementally maybe some more which is flowing out is going into IPOs, QIPs, offer for sales, etc. So I think given the fact that HDFC Bank is so overowned, retail investors have continued to plow in money into HDFC Bank on every decline. In fact, on the MTF book also, uh, HDFC Bank is the biggest holder at around 2.6% of the book. The next biggest is much lower than HDFC Bank. So I think those are the, I would say, technical challenges which HDFC Bank faces. Then there's entire leadership issue is uh, playing out. So I think if that gets resolved, I think we could see short-term relief for sure.
Okay. And okay, yeah, fair point. Sandeep, ITC is the other one where there is plenty of pain, right? What do you make of that as well? Looking good or not quite?
So I think same comments for HDFC Bank can be repeated for ITC also. The same thing. So
Yeah.
hugely overowned among retail investors. But then there, of course, there was a fundamental development with the kind of tax increases which the government did. Obviously, it's going to hurt the organized cigarette players, boost smuggling big time. So I think many of the companies have spoken about it. These kind of price hikes, even in a inelastic product, are very tough to absorb. So there'll obviously be impact on volumes and margins in the short run. The key is whether all of that is factored into the current price. And given the dividend yield that ITC has, I would like to believe that it's factored uh, in the current stock price.
Okay. So a lot of it factored in. How are these two looking like on charts, Kunal? If you can give us your take.
Yeah, they continue to look weak on the charts. In fact, HDFC Bank, ITC, both of them they're just dragging. So it's more like an inertia correction for these stocks where the volumes drop down, but the pace of correction also slowly and gradually reduces. However, the trend is still negative for these stocks. I think HDFC Bank, when the stock was at 750, few months back, the stock had reached the oversold levels in terms of the weekly RSIs. The RSIs are significantly higher, but the stock has made a fresh low, breaking below that 750 levels. Same is the case with ITC, when the stock was, I think, earlier at 300 levels a couple of months back, towards the current levels of 270, 260 thereabouts for ITC. The RSIs are higher, but the stock is continuously making lower lows. So in these kind of charts, it's very difficult to anticipate that when this time-wise correction could probably end. But we just wait for a trigger or the up move in the stock price, and then try and decipher that maybe demand has come back into the stock. As of now, no signals emerging for ITC as well as HDFC Bank.
Hindustan Copper is the other one which is in focus. You've got 9.7 crore equity shares which will be issued in a QIP by Hind Copper. This comes after the government divestment has already taken place. So it's a big one. That's the other one which will be in focus, 4,500 crore. That's what they are looking to raise, which certainly looks large. Sandeep, any view with regard to a Hind Copper? Expensive, okay? How are you looking at it?
No, never studied it.
Okay. All right. And any view on Tejas Networks and some of the cables and wires stocks as well? I mean, two different questions there. One on Tejas Networks, one on cables and wires. Sandeep, any view?
So Tejas Networks, I think the performance is too erratic for any long-term bet to be taken. So they suddenly get orders, they execute, then they have no orders, then they report big losses. So it's very tough for long-term investors to invest in such a stock. Cables and wireless as a business continues to do well. Most of the companies, stock price wise, have also done very well.
Uh, you know,
Valuations are not.
you have the Birla Group, which is launching its wires and cables business next week. Is that going to be a disruptor for this sector?
So it will be disruptive, but not as disruptive as paints was, because in paints it was sort of a 2, 3, 4 player market where another big player entered. In case of cables and wireless, it's a much more uh, let's say spread out market where each company, even the largest company, has a much smaller market share. So it will have an impact, but the impact will be lesser than what happened in the paint side.
And sorry, Sandeep, I'll allow you to complete that point you were making that while cables and wires, the traction is good, but looking expensive, right? That's what you were trying to make.
Yeah, because cable and wireless stocks, as a business, although companies have brands and all, but it's largely a commodity business sort of. So in that context, it's very tough for me specifically to give them valuations of 50, 60 times, which most of these stocks are trading at.
Okay. All right. Sandeep, just quickly trying to get a sense. Anything that's looking attractive to you right now, something you're studying, and any stocks that you're liking or buying?
So on the large cap side, I think L&T is something which I continue to like because I think the kind of order flows they are getting, people are too focused on what's happening in the near term, but I think next 2 years they might deliver 20 to 25% growth at least, and that could lead to a re-rating. So I think that's one stock on the large cap side which looks good. Even Reliance, I think it's totally out of no one is interested, but I think at 1280, 1300 levels, the stock is quite cheap relative to long-term prospects.
Okay. All right. Sandeep, thank you so much for coming in, giving us that perspective. We'll let you go.